What is the market telling me this week? Welcome to the Nick Rutherford Report. And here's the thing. The market is either taking advantage of you or you are taking advantage of the market. I want you to take advantage of the market, so let's look out for the next big opportunity. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, and let's look at the financial news that is important for building your net worth. Worst since the Great Depression, the Dallas Fed Services Survey slumps in May as respondents fear inflation is getting pretty scary. Why am I pointing this article out? Because just days later, we had an article like this hitting the news. Core PCE grows at the slowest pace in 3 years after the lowest monthly increase of 2024. Spending drops. Why am I pointing these out? For a very important reason. Because the market is trying to take advantage of you. Oh no, fear. Oh no, greed. Pay attention. Freak out. Go all in. Sell all out. This is all designed to make the market win and for you to lose. And that's why I point this out, because it's always contradictory things coming from the news. So we always want to look at the data to tell us exactly what we really should be doing. And Wall Street's at it again with this news article. And I'm pointing this news article out because you've probably heard, what's the next AI trade? Everyone always gets excited about AI and they think about the ramifications. And then if they missed out on NVIDIA or the chips run out, they're like, well, what else is there? Well, Wall Street's got to sell you something, so they talk about power. And power is the next AI trade. Well, here's the thing. When I invest, I like to invest in undervalued assets. Otherwise, the market is just going to take advantage of me. So I want to point out this chart from the RIA Simple Visor. And here's a chart of uranium producers. And the reason I'm pointing this out is because, AI is the next trade. Time to go buy power generation for AI. Well, hold on a minute here. This is just the market trying to take advantage of you, because if you look at this chart here, we've had a fantastic run on uranium producers because everyone's talking about nuclear power to power AI. But I invested heavily in uranium producers way back here in 2021 when they were all undervalued and when everyone hated them right at the beginning of 2021. They had just come off a huge bear market, and reading the technical indicators, it looked like they were going to move up and finally starting to make their move. And here we are. It's mainstream news 2.5 years later. This is just designed to suck you in. And if you're buying now, I'm going to be selling to you as this move continues to go up. At least that will be my hope. And here's the thing. I'm pointing this out because this is always the market trying to take advantage of people who are not paying attention to what it's really saying. So let's move on to this next article that I think is very important. And this just goes along with our theme of time to freak out, time to get excited. It doesn't really tell you anything. So here we have U.S. pending home sales plunged to a record low in April as rates rose. So what are they thinking of doing? Well, this is actually very interesting. 0% down mortgages return. What can go wrong? Well, this is an article that I'm pointing out because what do you think happens when they remove the down payment for mortgages? Well, this allows people who might not otherwise be able to afford a mortgage buy a house. This is going to drive home prices even higher, regardless of the interest rates. At least that's what I believe. And what's very important is I want to look at this graph. Because if you look at this graph, you can see that the owner's equivalent rent stays on a pretty relative flat line. And yet back here in 2005, 2006, 2007, you can see that home prices disconnected severely from that rent. And what's happening again right now? Well, they've disconnected entirely, hugely. I don't even have another way to explain it. I'll just make up that hugely word because they're so high relative to the norm that this can only be a bubble. in my view. Now, of course, the bubble could go even higher, and it probably will with 0% down mortgage. Is lots of people who couldn't otherwise afford a house will be buying a house, and this is just going to push prices higher. So I am certainly not a buyer here. I would be a seller if I owned a lot of real estate, but I don't because I believe we're in a bubble here. Now, of course, I could be wrong, and this bubble could go even higher, and you know what? It looks like it might. So this is just some of the data that I'm watching. And what happens next, and what am I doing about it? Well, as I said, all of these news articles are usually designed to manipulate you into doing the wrong thing at the wrong time so that people on Wall Street can take your money. So I like to look at the data to tell me what's going to happen next. And every week we've been talking about this theme of two different economies. The old economy that's doing poorly and the new AI and internet economy that's doing well if you're choosing the right investments. Well, let's look at the data here to see what we think could potentially happen next. So the Chicago PMI unexpectedly craters to depression levels. Why is this important? Well, I'm watching this because I want the data to tell me what to do because there's no arguing with the data. The Purchasing Managers Index, otherwise known as the PMI, is an index of people purchasing stuff at companies. That's a way that I like to think about it. And people at companies purchase stuff, they make stuff, and then they sell it to the consumer. So if this is cratering to depression levels, let's look at the graph here. You can see that during the plague, it was down at this level, and back at 2008, it was down at this level. This means we're down at this level right now. The economy is already going very slow, or at least a segment of the economy is going slow. So now the question is, what happens next? Because clearly big segments of the economy are not doing well. However, NVIDIA's chip orders are doing great. So here's the next thing that I'm looking at. So this article came out, and this probably wasn't picked up in the mainstream media, but if it was, it wasn't prominently focused. Q1 GDP revised lower to just 1.3%, lowest in 2 years as consumption slows. So it's very clear to me, if I look at the data, instead of getting whipsawed between greed and fear, that the economy is slowing. But until the data tells me that it's all the way to a place where a past recession or crash has happened, I'm not going to freak out. I'm still invested long. Of course, the data could turn bad and I'm going to lose a little bit of money, or it could bottom out and continue up, and then I'm going to make a lot more money. So to me, it's important to watch the market until I see data indicating that it's time to freak out, because I'm not seeing that yet. I'm cautious, but I'm optimistic. So let's look at some more data that I think is very prudent to this situation. One of the sites that I like to look at is this site called Trueflation. Now, allegedly, they measure a lot of different inputs on inflation. So everyone's been touting that inflation has been coming down. In fact, I did have an article here that I seem to have misplaced. Never mind. It was at the very beginning. Well, the core PCE grew just slightly, so you don't need to freak out as much. The media will tell you. Now, if I look at the Trueflation data here, the American dollar has declined in purchasing power 25% since January 2020. In this year alone, we had started at 23, and now we're up to 25. So 5 months in, we've already lost 2% of our purchasing power. So just because inflation comes down, it doesn't mean that it's going to go negative. Now, of course, if we have a recession or depression, we could have deflation, but that means assets are also going to go down. But why am I watching this? I'm watching this because if I'm in cash and I'm not invested in good assets that are growing in these economic conditions, I'm going to be losing money. So here's the proof right here that I would be losing money. So if I was just in cash, I would have already been losing money. And I think this next article is the best barometer that I've seen because it will make sense to everyone. Apparently, the rich people in Palm Beach are complaining about the $150,000 housekeeper. Wage inflation kicks into second gear. That's the title of the article. So As I was reading this article, it said there's a shortage of housekeepers for the super rich, and they're complaining that they have to pay $150,000. So, if you think that sounds like a lot of money, well, everyone probably thinks that sounds like a lot of money. And this means that we probably have a worker shortage, and obviously the dollar isn't going as far as it used to. So this is very concerning to me when housekeepers are costing the rich $150,000, because that means this wage spiral probably will trickle out to other people. We'll have more inflation, prices will go up, and what I'm taking away from this is I just want to be invested in good assets at the time they're undervalued that will take advantage of these themes. And another thing that I talk about every week is the theme. And this is a theme that inflation is continuing. So there's going to be a big problem in the future. So next week, we'll continue to watch the market to see what happens next. And I will wait for my opportunity to do something. Right now, I don't see anything to do, but I'm waiting and watching so that I can take advantage of the market and not be taken advantage of. So I want that for you too. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, and I'll see you next time. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.